Happy Earned Income Tax Credit Awareness Day. This is the 50th anniversary of the EITC. I'm Justin Spicer with Legal Aid of Southeast and Central Ohio, and we're joined today by Dennis, Megan, Simon, and Paul, attorneys from legal aids throughout Ohio. And we want to thank them for joining us. For EITC Awareness Day, we will be talking about the Earned Income Tax Credit, how to claim it, who qualifies, how to find tax assistance, and more. We will also briefly touch on the child tax credit. Feel free to leave a comment or a question, and we'll answer whatever we can. So, Simon, let's start off with why taxpayers should know about the Earned Income Tax Credit.
Thanks, Justin. The Earned Income Tax Credit, or EITC, is a tax credit for low and moderate income families and individuals. The credit is refundable, which means that to the extent the credit is more than the tax someone owes, it creates a refund on the tax return that is then paid to the taxpayer. It has been called one of the most effective tools for lifting people out of poverty. The Brookings Institute found in 2021 that the EITC lowered income inequality between black and white households by roughly 5 to 10% each year. And the average EITC amount in 2023 for Ohioans was $2,560. But this varies based on family size and income, and it can be as much as $7,430. For many people, the tax refund they get because of the EITC is the largest check or deposit of money they will receive in a given year, and many families use the refund to meet their basic living expenses.
So, Paul, what are the basic qualifying rules for the credit for the 2024 tax year?
So here's the basic qualifying rules. A taxpayer claiming qualifying children must have worked and earned income under a threshold amount. They must have made investment income below $11,600 and have a valid Social Security number and be a U.S. citizen or U.S. resident, not have made any foreign earned income, and use one of the following filing statuses: married filing jointly, head of household, qualifying surviving spouse, single, or married filing separate. If you use the married filing separate status, you must have lived apart from your spouse for the last 6 months of 2024, or were legally separated and not live in the same household as your spouse at the end of 2024.
Dennis, beyond those basic qualifying rules, does a taxpayer need a qualifying child?
No, a taxpayer can claim the EITC without a qualifying child, but the income limits are different. A single taxpayer without children cannot make more than $17,640, and a married couple filing jointly cannot make more than $24,210. For taxpayers with children, a single or head of household taxpayer must have income below $59,899, and taxpayers filing jointly must have income below $66,819.
Megan, what is a qualifying child?
A child is a qualifying child for the EITC if they meet all four of these tests. First, they are under the age of 19 at the end of the year, or under the age of 24 if they were a full-time student for at least 5 months of the year, or any age if the child is permanently and totally disabled at any time during the year. Second, the qualifying child must be the taxpayer's child, stepchild, adopted child, or foster child, a sibling, half-sibling, or step-sibling, or a grandchild, niece, or nephew. Third, the qualifying child needs to have lived in the same home as the taxpayer for at least 6 months. Fourth, the qualifying child cannot file a joint return with another person.
So, Simon, what happens if a qualifying child can be claimed by more than one person?
So, if the child is also a qualifying child of another person, only one of those people can claim the child for the EITC. And to choose which person can claim the qualifying child to get the EITC, there are tiebreaker rules. The first rule, if only one person is the child's parent, then that parent may claim the child. The second rule is if both parents file a joint tax return together, they can claim the child on that joint tax return. Third rule, if the parents file separate tax returns, the parent with whom the child lived longer during the year may claim the child. Now, if the child lived with the parents for the same amount of time, then the parent with the higher reported income may claim the child. And the last rule is if neither person who can claim the child is the child's parent, then the person who had the highest reported income for the year can claim, but only if that person's income is more than the income of any of the child's parents who could also claim the child. For example, if a child lived all year with his grandmother who had income of $45,000 and aunt who had income of $35,000, then the grandmother could claim the qualifying child. Now, if you can't claim the qualifying child because of the tiebreaker rules, you still may be eligible to claim the EITC with no qualifying child.
So Megan, it was mentioned earlier that a taxpayer can qualify for the EITC without a qualifying child. How does that work? I'm sorry, Paul, please take that question.
No worries. So if you don't have a qualifying child, you can still be eligible for the EITC if you meet all the basic qualifying rules that we talked about earlier. You have a home in the United States for more than half the year. You cannot be claimed as a qualifying child on somebody else's tax return, and you're at least 25 years old. The maximum credit for eligible taxpayers with no qualifying child is $632 for 2024.
So Dennis, is there an age limit to claim the EITC without a child?
Yes, there is. You can't be older than 65 years of age. However, if you file jointly, only one spouse must be under the age limit.
And can a grandparent claim the EITC, Megan?
Yes, if the grandparent is raising their grandchild and they otherwise meet the qualifications for the EITC, a grandparent can definitely claim it.
So Simon, if people have additional questions about the EITC, what resources are available?
The IRS has an EITC assistant to check if you'll qualify for the credit. And you can visit irs.gov/EITC assistant. And you can download publication 596 from irs.gov.
Paul, let's move on to the child tax credit for a moment. What has changed for tax year 2024?
Now the child tax credit, or CTC, is worth up to $2,000 per qualifying child. However, only $1,600 of that is refundable. That means if you don't owe taxes or your credit is more than the taxes that you owe, you can get up to $1,600 back in your tax refund per child.
And Dennis, what are the requirements to claim the child tax credit?
Yes, to claim the child tax credit, a taxpayer needs to have more than $2,500 a year in earnings, have a qualifying child, and also have a social security number or an ITIN, individual taxpayer identification number.
So Megan, do the EITC qualifying child rules apply to the child tax credit?
Kind of. The child must be the taxpayer's child still, or grandchild, stepchild, adopted child, or younger sibling, step sibling, half sibling, or their descendant, or a foster child placed with a taxpayer by a government agency. The age rules are different though. The child must have been under the age of 17 on December 31st, 2024. The child must live with the taxpayer for more than half the year, and the child claimed must have a valid social security number. One difference is that for the child tax credit, a residential parent or the parent with whom the child lived for more than 6 months can sign a form releasing the dependent to the non-residential parent. The child tax credit travels with the dependent. The EITC, though, always stays with the parent with whom the child lived for more than 6 months of the year.
Simon, when should taxpayers expect to receive their refund if they claim the EITC or the CTC?
By law, the IRS cannot issue the EITC or the child tax credit refund before mid-February. So if you claim the EITC or the child tax credit, taxpayers could expect to get their refund by February 28th If they file their return online, they choose to get the refund by direct deposit, and the IRS does not find any issues with the return. The IRS recommends checking "Where's my refund?" for a personalized refund date, and you can find that at irs.gov/refund.
And Paul, what if a taxpayer hasn't filed their taxes for a previous year? Can they still file their taxes to get a refund?
Yeah, they can. So a taxpayer has up to 3 years from the due date of a particular tax year's return to file the return or an amended return and claim a refund for that year. For example, the last day to file a 2021 return and still get a refund is April 15th, 2025.
Megan, before we finish up, can you update our viewers on how to find free tax filing resources?
Sure, there are several free tax preparation options for taxpayers who qualify based on their income. If you're in Franklin County, you can call 211 from any 614 area code phone or 614-221-2255 to schedule an appointment with a free tax preparation site through Tax Time Central Ohio. Tax Time Central Ohio is a United Way-based organization that coordinates free tax preparation sites in this area. The preparers at these sites are free, trained, and certified by the IRS.
Some counties besides Franklin also offer referrals to free tax sites through 211. If your county is not one of them, ask your local United Way if they are offering free tax preparation services. People who qualify for the IRS's Volunteer Income Tax Assistance, or VITA, can find free tax prep help at irs.gov/VITA. That's VITA. You can also look for free tax preparation help through the AARP Tax Aid at taxaid.arpfoundation.org to search for a tax prep site.
And lastly, there are also online options for help, including the website www.getyourrefund.org/UWCO. This website is staffed by trained volunteers who can help you prepare your returns and communicate with you by phone, email, and text. That website opens on January 31st, which is today. If you'd rather prepare your own taxes using guided software, you can visit myfreetaxes.com or visit irs.gov/free file. And that's free file without a space. The IRS's free file site went live on January 13th and is ready for taxpayers to use. To be eligible for IRS free file, the taxpayers must make $73,000 or less.
Okay, great. Thanks for all the amazing information. Thanks to everyone for tuning in. And for those of you who were eager to see the Spanish version of our EITC Awareness Day celebration, we apologize. We did have some technical difficulties, but if you tune back in at 3 o'clock, we will see you then. Thanks, everyone.